Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. As multiple concerns dampen the market, I think Signet Jewelers, ticker symbol SIG, is a company worth keeping on the radar for its great forward PE ratio of 7.3 times, its free cash flow yield of 23%, and solid momentum heading into 2022. The stock has particularly been a victim of weakness in the market, creating a very nice entry point for long-term investors. The stock is up 191.93% year to date, but recently in the month of December, it has pulled back very nicely to its 200-day moving average. The retail jeweler that owns K Jewelry, Zales, Jared, and per a recent acquisition, Diamonds Direct, since then, Signet Jewelers has posted two earnings reports and appreciated 13%. Within those reports, Signet Jewelers demonstrated that specific strategies that it is pursuing are showing initial success, including by alleviating dependency on holiday-related sales and on consumers patronizing malls. It used to rely heavily on Christmas, on Valentine's Day, Mother's Day, and bombard the airways with advertisements to get people to come in and shop on specific holidays. That was their business model. Being in a mall and have a seasonality to the business. Well, that business model has been deconstructed, and with many other events having been reduced or canceled over the past couple of years, Signet Jewelers stands to benefit from pent-up demand in 2022. The impact of shying away from dependence on holiday cycles was most evident in Q3. In the quarter, Signet Jewelers' same-store sales jumped nearly 19% year over year and 30% from 2019, even though there was no major gift-giving events to spur sales in the quarter. It is worth mentioning that Signet Jewelers grew same-store sales in the quarter, even though the company operated with over 400 fewer stores relative to 2019, which was a really good year. And retail foot traffic was below pre-pandemic levels. So its new strategy is working. The company also guided Q4 comps of 6 to 9%, signaling a solid improvement from its average Q4 comps of a loss of 0.5% for the past 5 years before the pandemic. Q4 comps are stacked against a 7% growth from the year-ago period, representing continued pent-up demand from consumers. Signet Jewelers is also focused on transitioning from mall formats to more productive off-mall locations. For example, Signet Jewelers has increased the off-mall penetration of its K Jewelers brand by 4% over the past 2 years. Almost half of K Jewelers locations are now outside of malls. Signet Jewelers also noted that growth in its off-mall locations, it's outpacing that of its traditional mall stores. This has been true for many off-mall based retailers, especially during the pandemic. For example, Kohl's, ticker symbol KSS, noted in Q1 back in April that its off-mall presence is a critical competitive advantage as consumers appreciated the extra convenience and the open air space versus the enclosures of malls. Lastly, Signet Jewelers continued to expand gross margins in Q3, up 380 basis points year over year and 360 basis points on a 2-year stack to 37.4%. A significant component of margin expansion comes from Signet Jewelers' focus on reducing cost, primarily through reducing employee and inventory turnover. For example, new employee turnover was down 60% in the quarter as Signet Jewelers' actions over the year started bearing fruit. Furthermore, inventory turnover fell 50% due to Signet Jewelers offering more customer fulfillment options, such as in-store pickup and ship from store. Overall, Signet Jewelers is showing that its strategies are paying off, boding well for the company as it heads into 2022. With 2.6 million weddings estimated to be held in the US during this year, the most in nearly 3 decades, Signet Jewelers is at the forefront of a very strong tailwind. Although, I have to say, even though the Omicron variant increases the risk of such events that may be canceled or even pushed back, those concerns could be overblown, especially given the presence of mass vaccinations and other treatments that were just beginning to roll out in late 2020 and early 2021. As a result, Signet Jewelers is a solid buy and hold for investors heading into the new year. As always, it's a good reminder to set a stop loss limit order on any positions that you are just starting. So, what do you think about Signet Jewelers? Could this be a cornerstone in your portfolio? Let me know in the comments below what you think. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.